Hello guys, welcome to the video lecture on Introduction to Accounting. So our topic in today's video is about the term trade discount and cash discount. Now what we mean by the term trade discount and cash discount? Now trade discount is given on the catalog price of the good. So it's important that the trade discount is given on the catalog price, whereas a cash discount is given on the invoice price. So we require to understand what is a catalog price and what is an invoice price, and then we require to understand what I mean by the term trade discount and cash discount. The second point is the trade discount is granted with the aim of increasing the sales, or else rather in bulk quantity, whereas a cash discount is normally given in order to make a quick cash payment. Now what I mean by this, we will be discussing this particular point also in details in this video. And lastly, our trade discount is shown as a deduction in the invoice price, which we are going to show it via journal. So let's understand the first part of what do you mean by the term trade discount and a cash discount. Now to understand the very important part of what a trade discount and a cash discount is, let's understand the meaning of a term which is known as a channel of distribution. Now what I mean by the term channel of distribution, a channel of distribution means that a manufacturer who is manufacturing a particular product and a consumer who is demanding or consume a particular product, how the product moves from a manufacturer to a customer. So the manufacturer who manufactures a particular product might pass the product to a certain distributor dealer who in turn sells it to a particular customer. Now within this channel of distribution system, retailer, distributor or dealer are termed as agents or intermediate to be part of this channel of distribution. Now, in trade discount, one of the most important concept is that the retailer will demand in bulk, that means in huge quantity, goods, products from the manufacturer. Secondly, the manufacturer should make sure that the retailer makes a certain amount of profit after selling it to its customer, because retailers, distributors, dealers are basically selling your product to the final consumers. So you need to make sure the fact that the retailer, distributor, dealer, or we term this as intermediate or agents, makes certain profit. Now let's talk from the point of view of this example. If the MRP of the product is 100 and the manufacturer sells it to a retailer at rupees 100, so the cost price to the retailer is rupees 100, who sells it to a customer at rupees 100, then if you take this example into consideration, the retailer makes no profit, neither the customer gets any discount. If this is the scenario, then whoever be the intermediate, be a distributor, dealer or a retailer, will not be in a position or will not be interested to sell the product to the customer because they are not making any profit, and thereby the manufacturer's product will not move via the channel of distribution to its customer. So the basic objective behind giving a trade discount from the point of view of a manufacturer who gives it to a retailer or an intermediate is that the retailer demands product in bulk or in quantity, and secondly to make sure that the retailer makes profit. So let's understand the concept of trade discount and cash discount with reference to an example. Say the MRP of the product has been marked at rupees 100. The manufacturer has manufactured a particular product and the manufacturer sells to a retailer at rupees 80, which means to say the catalog price is 100 rupees, which is the MRP, and it has been passed to a retailer at rupees 80. So the difference between the catalog price and the cost price to the retailer is what is termed as a trade discount. Now why this discount is given? Again, the discount is given, point number 1, such that the retailer demands in bulk quantity, and point number 2, such that the retailer makes certain amount of profit. Therefore, the cost price to the retailer stands right now at rupees 80. Now as a customer, when I come to a particular store to buy a product, I can see the MRP of the product has been marked at 100 rupees. Now, if the retailer gives me that, okay, I'm giving you a 10% discount, say for example, then the customer has to pay a cash of rupees 90, because 100 rupees minus a discount of 10% means say 10 rupees. So I require to pay rupees 90. So as a customer, I'm very happy about the fact that the retailer is giving me discount, which will in turn increase certain amount of sales in my store. And secondly, the retailer also makes certain profit because the retailer's cost price is 80 and the retailer is selling to the customer at 90. Therefore, the retailer also makes profit. So the concept of trade discount and cash discount from a business to consumer point of view, I mean to say B2C point of view, there's the existing of a trade discount, which is a discount given by a manufacturer to a retailer. And on the other side, a cash discount is given by a retailer to a consumer such that there is an improvement or there is an increase in the demand for that particular product from the point of view of the customer because a certain discount is given. Now let's understand the trade discount and cash discount from the point of view of business to business scenario. If you remember, in our definition we said a trade discount is given on the catalog price of the goods while the cash discount is given on the invoice price. And we have explained the second point where I said the trade discount is normally granted with the aim of increasing the sales in bulk quantity, as well as the cash discount is normally given such that you are making a ready cash payment. So let's discuss from the point of view of what is a catalog price and what I mean by the term invoice price. So if you refer to this particular example, you will find that from the list price or the MRP of the product minus the trade discount. So for example, as per the last example, the trade discount was given as 20%. So the MRP of the product, the list price of the product, which I say as the catalog price, is rupees 100. So 100 into 20% trade discount means 20 rupees. So basically the cost price or the invoice price to the retailer is basically rupees 80. Now this is an example from a B2B scenario. Now the retailer requests to make payment to the manufacturer. Now say for example, if the terms and condition with the manufacturer and the retailer is that they require to pay this particular amount within a time span of 2 months. Now if the manufacturer requests cash, they have to wait for the next 2 months to get this particular cash from the retailer. Now what a manufacturer can give? The manufacturer can give also an additional cash discount to make a ready cash payment from the retailer. Now what kind of terms and conditions given? Say for example, if you pay, so the manufacturer is saying if you pay me within a month, because if you remember the terms and condition was 2 months. After 2 months the retailer is supposed to pay. But I am giving a option to the retailer that if you can pay me within 1 month, I'll give you an additional 10%, which is the cash discount. So the cash discount is calculated on the invoice price here. So 80 rupees into say 10% cash discount is 8 rupees. So the retailer actually pays 72 rupees, which is 80 minus 8 rupees. So the retailer pays 72 rupees. So in addition to the trade discount which is given 20%, which is the difference between the list price and the invoice price because of the trade discount component, such that the retailer makes a ready cash payment before the due date, are giving an additional cash discount of 10%. So 80 rupees into 10% is 8 rupees, which in turn means actual amount paid is 72 rupees. Thus, if we come back to the definition, we say the trade discount is given on the catalog price of the goods, while the cash discount is given on the invoice price. So we have explained this particular point. The second point was the trade discount is granted with the aim of increasing the sales in bulk quantity as well as profit to the intermediate, whereas the cash discount is normally granted to facilitate a quick payment because the terms and condition was 2 months, but I'm giving a cash discount such that the retailer pays me within 1 month, so I get the cash immediately. Now let's move on to the third point, which says the trade discount is shown as a deduction in the invoice. Now what it means, let's explain this with the help of a journal. Now in this particular journal, we are doing it in the books of SK Eduinfo and Co. And it is being mentioned that sold goods to SN Roy, who is one of the retailer or the vendor, rupees 6,000 less 5% trade discount, and SN Roy has settled his account less 2% cash discount. So how we account for it? So the first, we have sold goods to SN Roy, rupees 6,000 less 5% trade discount. So SN Roy is basically an intermediate or an agent who is in the channel of distribution. So I have given a 5% trade discount. So since SN Roy, we have sold goods to SN Roy being a personal account, receiver is debited and sales account is credited. Now if you note, in trade discount, the discount component is not recorded, but it is deducted from the final price. That means out of 6,000 into 5%, the discount amount is 300. The trade discount component is 300, which is not recorded. But what is recorded? The difference between the catalog price minus the trade discount and the final invoice price is recorded, which is 5,700. Now SN Roy settled his account less 2% cash discount. Now SN Roy, who has sold this particular product at 5,700 because the trade discount was given, since he's making a ready cash payment right now, he is getting an additional 2% discount, which is a cash discount. So the cash discount has to be calculated on the invoice price, which is 5,700. So SN Roy is paying cash. So from the point of view SK Eduinfo and Co, in the books of SK Eduinfo and Co, we are receiving cash. So cash account is debited. Secondly, discount allowed account is debited. Why? Because we are allowing discount to SN Roy and SN Roy is paying me that reduced amount. So from the point of view of SK Eduinfo and Company, we have allowed discount. Allowed discount is a part of nominal account. It's a loss. Why it's a loss? Because we are supposed to get 5,700, but we are not getting 5,700. We are getting 5,586, which is a reduced amount. That is the reason we term it as a loss. We will be discussing in details about discount allowed and discount received in our next part of our video. So cash account is debited, 5,586. How we got 5,586? Because we calculated the discount component, which was 5,700 into 2% is 114 rupees. So we have deducted from 5,700 114. So we got cash as 5,586. Discount allowed account debit is 114 because discount allowed nominal loss, and SN Roy account, who is paying the money, giver, is 5,700. So we have understood from here that in case of a trade discount, the trade discount component is not recorded, but we deduct the amount of trade discount from the catalog price and record the invoice price amount. So let's go back to the definition again. So we have discussed all the 3 points where we discussed about what is a catalog price, what is an invoice price. A trade discount is normally given on a catalog price, while a cash discount is given on an invoice price. The objective of giving a trade discount is of making sure that there is huge amount of bulk quantity being ordered by the retailer and to make sure the retailer makes profit. Whereas a cash discount is normally given such that the retailer makes a very quick cash payment. And lastly, a trade discount is shown as deduction in the invoice. That is what we said. The trade discount component is not recorded, but it is deducted and then recorded. So to conclude, let's understand the difference between the trade discount and cash discount. So from the point of view of the first point, meaning it is a type of discount that is offered by the seller to the buyer as a reduction in the price of the product, which we said catalog price minus the trade discount is the invoice price. On the other side, cash discount is a discount offered by the seller to the buyer on the invoice amount. So one is on a catalog amount, the second point is on an invoice amount. What is the purpose of offering the discount? The purpose is bulk sale and profit in case of trade discount. But in case of cash discount, it is making sure that you make a ready cash payment before the due date. And that is the reason why cash discount is given. Accounting treatment, not shown in any books of accounting, reduction adjusted with the final price. That is what we said. 5,700 we recorded. We haven't recorded 300 in our example. So the discount component of trade discount is not shown in books of accounts, but rather it's adjusted with the final price. On the other side, in case of cash discount, it is properly recorded in the books. And we will come across in our next video about the two terms. One is known as discount allowed and discount received, which will be discussed, and its impact in the profit and loss account as an expense. Point number 4, when the discount is allowed. Trade discount is allowed at the time of purchase, where a cash discount is allowed at the time of payment in terms of cash. And the last point says allowed on transactions, both cash and credit in case of a trade discount. But in case of cash discount, it is only related to a cash payment before a due date. I hope you have understood the basic concept of what is trade discount and cash discount. Till then, thank you. Have a nice day.